I want to tell you guys exactly how I made 24.5% return in 2017. Hey everyone, welcome back to Drawbridge Finance. My name is Levi Woods, and this is an opinion channel about money. Today I want to talk about how exactly I made 24.5% return in my primary investment account. I've built a little spreadsheet, and for privacy reasons, I have concealed the name of the other person. But both of these accounts are actual numbers from returns in 2017. One of them is my account, and one of them is a close friend of mine. We're going to take a look at this top section. I've told you before, you only need 3 accounts: a non-registered savings plan, a TFSA, and an RSP. I also have some work investments that go into. There's not a lot of money in there, but it is part of my investment strategy. They're locked in, so I can't do anything about it. This other person has 3 primary accounts: their RSP, their TFSA, they're non-registered. They also have a secondary RSP. They have a non-registered plan that they are going to close sometime in the future, and they have an RSP that they actually closed last year. Let's look at what's actually in these accounts. In the NRSP, this is my account that I trade on every single day. It is comprised primarily of dividend equities. There's a handful of growth stocks, and then I do a lot of option trading in this account. And we're going to see how those different things play out. Then I have 4 accounts that are managed by somebody else. So these are accounts that money goes into, and then that advisor tells me what to buy. So they're fully managed accounts. 2 of them are mutual funds. We'll see how they perform. And 2 of them are managed privately with dividend equities. Alice, if we look at her, she's got her primary RSPs in mutual funds. Then her secondary RSP is a combination of dividend equities and growth stocks, and it's self-directed. Then she has a TFSA that again in mutual funds. Then she's got a non-registered plan that is a combination of dividend equities and options. This is a very, very small account. She plays very aggressive options on that. The NRSP and an RSP were both in mutual funds. For inclusive purposes, I would show you how the money is spread out. You can see in my account, I have 60% of my net worth in my NRSP. I have 18% of my net worth in my TFSA, and 13% of my net worth in my RSP. Now, of course, my RSP is actually a small percentage of my net worth, because one of the concerns that I have is that I contributed so much to it when I was young that it is going to be worth a huge amount of money when I turn 65. And I don't want it to be over contributed to. So I've actually choked it down, and I keep a limit on how much is going into my RSP. In fact, I'm 38 and I haven't put any money into my RSP for the last 8 years. Then I have these other 2 RSPs, an old one that's not getting contributed to, and a non-registered, which is only worth 1% of my overall wealth. Now, Alice has over 85% of her total net worth is in her RSP, and 10% in her TFSA. These other 3 accounts account for just around 4% of her total net worth. Okay, let's look how they performed in 2017. So first, we'll look at the total annual return. You can see that my dividend equity accounts returned 24%, 9.2%, and 7%. My mutual funds, this one's terrible, returned to 3.6% and 8.9%, which wasn't bad for this mutual fund. Alice, on the other hand, has her mutual fund, 9.1%, her dividend equities and growth stocks, 16.8%. Not surprising at all, because these dividend equities have been outperforming the mutual funds, generally speaking, for the last 9 years. In fact, they almost always outperform mutual funds. And we've got 7% in this mutual fund, a negative 11% in this self-directed dividend equities and options trading account. Now, one of the things you have to take into consideration is that I said before, she is playing very aggressively with these options, and also it's worth just 2% of her total net worth. So even though it's showing as a huge loss for the year, it's very, very small amount of money comparatively to what she has. So she's very aggressively trading with a small amount of money. Then a mutual fund, 3.4%, and another mutual fund, 8.6%. So now let's look at the breakdown of where the money actually came from. If we look at the mutual funds here, they actually show a 0% dividend because they just don't pay one. All of the value is based on the value of the mutual funds. These numbers correlate. Now let's look at the dividend equities. Now these are the managed accounts. The overall return was 7%. 6.4% of that 7 came from dividend payouts. 0.6 came from growth. This 9.2, we've got 7% in dividends and 2.2% in growth. In this account, which I trade options as well, we've got 7.7% dividends, which is expected because our target's usually around 7%. We had a fund decrease of 0.4%, and we had an options return of 17.2%. So what that means is most of the money that I make in that account is from active option trading. Let's take a look at Alice. Again, starting in the bottom, mutual funds, 0%, 0%. All of the growth was shown in the mutual fund. Let's look at these other mutual funds. So these ones pay a small dividend, 1.1% and 1.2%, and then we saw some growth, 5.9 and 7.9. Again, we add these together, 1.2 plus 7.9 equals 9.1. Now let's look at these self-directed ones. Now these are the dividend equities. Again, our dividend target, really easy to hit this number, 7.3%, 7.7%. Then we've got growth, 9.6%. So total 7.3, 9.6, 16.8. The dividend equities with the option trade, we had a massive loss. Now this particular trade was from a single option, and again, I said this account was very, very small. So a single option, we decided at the end of the year to make this play count against the value of the stock. And one of the beautiful things about options is you can move that money a little bit and decide if you're going to show a capital loss either in the stock column or in the option column. So we decided at the end of the year that it was better to carry over that loss and put it into the stock trade. And so that shows that massive loss there, but this is actually because specifically of a single option trade. So the option trades in this case are actually a positive number, but the reality is that you kind of have to look at these together because they're correlated. So overall, a negative 11% return. When we look at the whole accounts all together, you can see that 6.7% of my total income last year was from dividends. 0.7% was in increases of value, and 10% is from option trading. This is why I myself am an option trader, because I know that I can make more money actively trading options. I put a lot of time and effort into doing that. My total annualized return for all of my investment accounts was 17.3%. Pretty good year. Not quite as good as 2016, but pretty good. Then the total for Alice, she made 3.86% in dividends. Some of her biggest holdings are not paying them. This 44% of her account is paying only a 1.2% dividend. And then 8.2% of the value increase of the mutual funds or dividend paying equities. And then 0.1% only was the option trading. So again, very, very small amount for her option trading. So she has this quite good return of 12.1% considering how many mutual funds she has in there. Well, that's it for today's video. Hopefully you guys learned a little bit. Thanks so much for watching, and remember to leave a like or comment down below. Let's get rich together. See you soon.